Stop panicking about MicroStrategy's buying pause. Seriously. If you saw the headline, Strategy buys 0 Bitcoin this week, and you think the Bitcoin bull run is over, you just fell for the trap. Here is the counterintuitive truth that 90% of retail investors don't understand. Companies have earnings blackout periods. Michael Saylor said it himself. No buys this week, back to work next week. That's not a change in strategy, that's compliance. Meanwhile, Strategy just reported a 45% stock gain this month. Total Bitcoin holdings, 818,334 BTC, worth nearly $67 billion. And the prediction markets are giving a 61% chance that Strategy will own 1 million Bitcoin by December 2026. But there's also a 38% chance their preferred stock, STRC, could crash to $90. Below its par value of 100. Let me break down all 3 updates. And, hey, stay until the end for the 3 secrets that will change how you read every MicroStrategy headline from now on. I'll admit something. When I first saw Strategy buy 0 Bitcoin, I got nervous too. I thought, is the bull run over? Did Saylor change his mind? Then I read the actual statement, and I realized I was reacting to noise, not signal. Today, I'm going to show you exactly what's happening with MicroStrategy. We're going to look at the Bitcoin buying pause, why it happened and why it's temporary, the director's share sale, why it's no big deal, and the prediction markets, where traders are putting their real money. By the end, you will understand the difference between headline panic and actual risk. Stay with me. Let's start with the news that got everyone worried. The headline: Strategy buys 0 Bitcoin for the first time in months. The context: between January and April, Strategy bought over 100,000 BTC worth approximately $7.5 billion. Then, nothing. 0 buys for the week of April 27th to May 3rd. The reason: earnings blackout period. When a public company is about to report earnings, insiders and the company itself cannot make large trades. It's a legal requirement, not a choice. Michael Saylor's exact words: no buys this week, back to work next week. The current holdings, 818,334 Bitcoin. At current prices, around $81,500, that's worth approximately $66.67 billion. The counterintuitive truth: the pause proves they're playing by the rules. It actually increases credibility, not decreases. And Saylor explicitly said buying resumes next week. Now let me address the second headline that scared retail investors. The news board director Jarrod Patten sold 4,000 shares of MSTR. The total value, $676,200. His remaining holdings, 28,000 shares. The counterintuitive truth? This is not insider panic selling. Why not? First, $676,000 is a relatively small amount for a board director. Second, he still holds 28,000 shares worth over $5 million. Third, directors sell shares for many reasons: buying a house, diversifying, paying taxes. What would actual insider panic look like? Multiple directors selling large percentages of their holdings, all at once. No insider buying to offset. That's not happening here. The only notable insider buys recently? Saylor himself. He continues to accumulate. The bottom line: one director selling 4,000 shares is not news. Don't let it distract from the real story. Now let me show you where the smart money is actually betting. Because, prediction markets are often more accurate than analysts. So, here's prediction 1, 1 million Bitcoin by December 2026. The current odds? 61% chance. The market believes Strategy will add another roughly 180,000 Bitcoin over the next 18 months. And at current prices, that's about $15 billion in additional purchases. Now, prediction 2. STRC market cap hits $12 billion by the end of June. Current odds are 62% chance. STRC is Strategy's preferred stock, and investors are, well, definitely bullish. Moving on to prediction 3. Strategy sells any Bitcoin this year. The odds? Only 10% chance. The market overwhelmingly believes Saylor will hodl, not sell. And then, prediction 4. Margin call risk. Current odds are 12% chance. So the market sees a pretty low probability of a forced liquidation event. But here's the one to watch. STRC falling below $90. The current odds are 38% chance. Remember, STRC has a par value of $100. If it drops below 90, it creates problems for Strategy's funding model. The counterintuitive truth? Prediction markets are bullish on Bitcoin accumulation, but they're cautious on the preferred stock. Now let me address the immediate risk. Earnings are today at 5 p.m. Eastern Time. Wall Street expects a loss of $15.53 per share. Why the big loss? Well, it's all about accounting rules. Strategy must mark its Bitcoin holdings to market. If Bitcoin's price drops, they book a loss, even if they never sell, and even if the price recovers next week. So, what about the stock reaction to earnings? The stock is up 45% this month, currently sitting around $186. Analyst targets range from $160 to over $300, depending on Bitcoin assumptions. Here's the counterintuitive truth. Earnings losses don't really matter. Bitcoin's price is what matters. Strategy's entire thesis is that Bitcoin will appreciate faster than their borrowing costs. The accounting loss is just noise. The Bitcoin price is the real signal. So, what should you actually watch? Not the EPS number, but Saylor's commentary on the earnings call. Does he reaffirm the accumulation strategy? Does he address the STRC par value concerns? That's what actually moves the stock. Let me leave you with the 3 secrets that connect everything we just discussed. Secret number 1, the buying pause trap. Companies have blackout periods. It's totally normal, and honestly, it's required. When you see 0 buys, just ask yourself, is there an earnings report coming? 9 times out of 10, that's the reason. Headlines know this. They just choose not to tell you. Secret number 2, the insider sale illusion. One director selling 4,000 shares is not a signal. You want to watch for patterns. Multiple insiders, large percentages, and no offsetting buys. That's when you worry. Patten still holds 28,000 shares, so that's not a bearish signal at all. Secret number 3, the prediction market edge. Prediction markets are often more accurate than analysts, simply because people put real money behind their predictions. The market is 61% confident in 1 million BTC. That's not just a gamble, that's a consensus. When prediction markets and fundamentals actually align, pay attention. So, what should you actually do with this information? If you own MSTR, the common stock, ignore the buying pause headline, ignore the director sale, just watch Bitcoin's price, and keep an eye on Saylor's commentary during the earnings call. The stock is up 45% this month, so some profit taking is totally normal. But the main thesis remains. If Bitcoin goes up, MSTR goes up even more. If you own STRC, which is the preferred stock, watch the $90 level closely. Prediction markets give it a 38% chance of dropping below $90. If that happens, it could put pressure on Strategy's funding model, so maybe consider tighter stops or hedging. If you're thinking about buying, earnings today at 5 p.m. Eastern could create some volatility. The 61% chance of 1 million BTC by December 2026 suggests upside, but STRC's 38% crash probability suggests you should be cautious on the preferred shares. And here's the counterintuitive truth. The buying pause is not the story. The STRC par value risk is the story. Most headlines will focus on the pause, but smart investors will focus on the preferred stock dynamics. Don't be most investors. Here's my question for you. Do you think Strategy will hit 1 million Bitcoin by December 2026, or is the 61% probability just way too optimistic? Drop your answer in the comments. I read every single one. Like and subscribe if you want more myth-busting analysis on Bitcoin stocks before the crowd figures it out. I'll see you in the next video.